What's going on, y'all? Hope all is well. Another episode of Convos with your CFP Mario Payne in beautiful Jacksonville, Florida. I know one thing, y'all. TMF is doing what I said it was gonna do. We're gonna talk about that, get some information about the Fed, how they had an estimation last year, and it's coming to fruition. I believe it's gonna be at least 3 to 4 rate cuts, which means my TMF that's already up by literally 45% in 2 months might continue to grow. And before we get started, as always, like, subscribe, share as our channel continues to grow. Check us out on our Instagram at Paynefulprofits as well. But let's make some profits with TMF. Talk to us, Kev.
So what did the Federal Reserve think that inflation was going to be at the end of 2023? All right, so we look here. End of 2023.
So remember, the Federal Reserve looks at inflation, and that kind of gives them direction to either cut interest rates, don't do anything with rates, or lower the Fed funds rate.
Projection, and we can see this projection was made September 20th.
Okay.
All right, so what did we have September 20th? Well, on September 20th, we had projections that PCE inflation would be 3.3% and that core PCE would sit at 3.7%.
So that means from an inflation standpoint, for every $100, September of last year, it should now be $103 or $3.70. I mean, it's going to go up by 3.7 or 3.3%. That was their projection for June.
And in June, the projection before that, we were at 3.2 to 3.7 or 3.9. So let's just take a midpoint here for a moment.
In the middle.
So take a midpoint of these projections. Let's say basically at the end of the year, the Federal Reserve thought that inflation would be 3.25% on the headline and 3.8% on core.
So again, they think at the end of the year, it'd be at 3.8%. Now, my profiteers, let's get to this.
All we did here was take the difference between the Fed's June opinion and their September opinion. Keeping in mind that their last rate hike was in July. And then
remember that. So they have not raised rates in over 6 months. Remember, they came into it saying it's going to raise rates. They did raise rates in 2022 and in 2021 and in 2023. But as of July, they stopped.
Midpoint. See that? What was their estimate of inflation here? What was their inflation estimate here for the end of the year?
Right.
Well, that was between 3.25 and 2.8%.
Okay.
What did we actually get with the rigged numbers?
Okay.
Well, core PCE, instead of being 3.8% for core PCE, we actually got 2.9%.
Think about that, y'all. They calculated it would be 3.8. It actually came to 2.9. What does that mean, my profiteers? That means that their thought process about raising rates over time was going to lower inflation is happening. Now, yes, food is still high. Gas is not as high as what it used to be, but it's still high. But they have done their job. Inflation is going down. This data right here gives them the ability and the standing on business leg to stand on to raise rates. And when they raise rates, TMF, we'll talk about here in a second, is going to go up because historically, when the Fed lowers interest rates, long-term treasuries like TLT, TMF, and 20-plus year treasury bonds go up in value from a price standpoint.
2.9.
You're right.
And the annualized rate for the year, 2.4%.
Annualized, they thought it was 3.2, not 2.4. So again, they had it 1 from an inflation. It's going down more than what they predicted. So do you think they're going to raise rates? Of course not. You think they're going to keep rates like they are? No, they want to drive down rates so businesses can get back to employing people. They can have less money from an interest standpoint owing, which means they'll create more jobs. And again, TMF go up.
Well, okay, but what about headline? Headline, which was expected to be 3.25. Well, for headline, we got 2.6. So another
2.6. Not 3.25, y'all, 2.6. So again, the things that they did with raising rates, right, trying to do things to lower inflation, it is working. It's working more than what they actually predicted.
In other words, substantially lower.
Yes.
Now that's very interesting. So 2.6 for non-core is about 0.625% lower. That's like 2.5 rate cuts of 25 BPs lower than what the Fed thought it was going to be.
So half their job is already done, right? Because if it was going to be rate cuts, they usually lower rates at 2.5%. So if it's already 0.65% lower than what they calculated, that's like them lowering rates by 0.25%, and then a month later by 0.25%, and then by 0.1% or 1.5, right? So things that they thought that they was going to have to do, it's already done. So it's already done. Why keep rates up? Come on, y'all.
And the core figure was about 30 basis points lower than what the Fed thought it was going to be. But not only that, it's a little ridiculous.
Okay, what?
Nick T makes this really interesting analogy. Well, I guess I shouldn't say it's really an analogy. It's kind of just pointing out by logic here that it might actually be even worse than what I've just described. The reason is...
That's a good thing.
He says in the last 6 months, if you annualize what PCE inflation has been over the last 6 months, you actually end up finding that inflation has been 1.9%.
1.9%. Now, you think the Biden administration would be jumping from the rooftop if inflation was at 1.9%?
Okay, so that's interesting. So the Federal Reserve is potentially way behind. In other words, they've already gotten inflation substantially down, at least via PCE and the Fugazi numbers. This doesn't mean prices are lower. Remember, the Federal Reserve isn't actually trying to get inflation lower.
All right, so Fugazi, who knows? We know it's not Fugazi though, right? Now, yes, governments can manipulate numbers somehow, but you can't manipulate inflation. So my profiteers, this is why I feel so good about my baby, TMF. Go to the charts. Well, my profiteers, as we can see, as we talked about, when the Fed started raising rates, this thing went down by over 90%. Tough. But let's open this thing up. Open it up, man. What has happened? The Fed has not even announced yet. Not yet. They haven't even announced that they was going to lower the Fed funds rate. They said they predict they are, but they didn't announce when. Well, because that announcement, my profiteers, it is up by 64%. When they made that announcement, October 28th to now, 64%. 100 grand is now $164,000 today. Now, I want to be diversified. Don't put all your eggs in one basket. But my profiteers, y'all see what I'm talking about. However, the Fed also said that they want to get the Fed funds rate back to where it was in 2022. Now, I'm calculating it might take 3 years. Hopefully for those investors, it might be sooner. Hopefully the economy is sooner. But let's just say it does take 3 years, right? It takes 3 years to get back to where it was in 2022. And we're going to say, when in 2022? We'll just say June 2022, right? June 2022 went down by 70%. Well, my profiteers, again, if we get back to where we were June of 2022, that is at $152 a share. Right now, it's at $56 a share. So that means my profiteers, who's calling me? That is 167% return. If it gets back to where it was January of 2022, yes, my profiteers, 365% Again, my profiteers, 365%. In 3 years, if this gets back to where it was January 2022, per what the Fed said, my profiteers, we are good. How good are we? We'll take a time value of money calculator, and then we say just $10,000, and we do it over 3 years, and we'll do 110%, which is very, very high. Doubling your money in 8 years, nevertheless 1 year, very, very low probability, but that's what the Fed wants to do. If the Fed does that, we look up, and in 3 months, yes, but we look at annually, and we see here, $10,000 is now $258,000. So is it going to happen? Nobody knows but God the future. The Fed wants it to happen, and it's already up by 60% in 2 months, and the Fed has not cut nothing yet. They've paused rate hikes since July. They have not cut. And we know, per the data, it's already been cut from an inflation standpoint. So they kind of have to. They don't have to, but they kind of have to. Get it, my profiteers? TMF. Not all your money, though, but definitely a portion from a risk tolerance standpoint you want to think about. So there we have it, my profiteers. My baby, TMF for the win. Again, the past 2 months up by 64%. It went as high as $61 a share. Now it's back at 56. So we actually buy the dip if you want to do that. For my clients, we're getting to it. Anyways, y'all, comment below what y'all think about inflation. What y'all think about TMF. We in it or not in it? Up to y'all. But let's make some paper profits together, y'all. Peace.
Making no money mistakes. Make a payment on your bills and you still late. Yeah, Payneful profits to help you seek change. And you just wanna get paid. Yeah, tired of making no money mistakes. Make a payment on your bills and you still late. Payneful profits to help you seek change. Yeah, cut the show and just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Been check to check, you know, and it could be different. You